Hey everybody, Joshua Phillips here with Churchill Mortgage. Happy July the 5th. And let me just say up front, it probably should be a rule that if the holiday falls on a Thursday, everybody should have the Friday off. But glad to be here working today. We've been pretty darn busy. A lot of people writing contracts, and we're here in the thick of summer as people are out looking for homes. So wanted to jump into a market update for you guys. I actually wanted to start here on this other screen. This morning, wake up, this report comes out first thing in the morning. The jobs report, it's a super important report to really say what's going on with the economy. It came out with 206,000 jobs in June. That was pretty much exactly what was expected. So what we honestly want to see better interest rates. We want to see worse than expected. As expected, but unemployment rate did rise to 4.1%. So again, purely from the perspective of what's helping mortgage rates, we want to see the unemployment rate rise. We want to see jobs fall. And but you know what? Let's move over here to mortgage-backed security charts. So mortgage-backed securities, in case you're new to watching these videos, mortgage-backed securities are where mortgage rates derive their values. What you're looking at is a Japanese candlestick chart. Feel free to ask ChatGPT or Google it. But basically, all you need to know is that green is good, red is bad, and the higher the security price, the better mortgage rates are doing. So this was actually a pretty wild few days where we saw, I'll see if I can get my pointer here. We saw, I think this was Friday, and then Monday, security prices just getting much worse. I mean, this felt like it was tanking. Honestly, it had been in a downward movement for almost 2 weeks now. And then, we turned things around Tuesday, Wednesday, and today we have bounced back higher. This is good news. Again, at the end of the day, these rates are moving up and down an eighth of a point. Really, in the last 30, 60 days, we really haven't seen rates move more than maybe a quarter of a point. So these are not major movements. What's interesting, though, which I like to nerd out on these charts, is that we keep hitting this level right under the 101 level. Let's see if we can pull up a 6 month chart. This is a 3 month chart. Let's see if we can get into a 6 month chart here. But we keep hitting this level. We've hit it numerous times over the last 2-3 months, and we just can't seem to break through that level. We call that a ceiling of resistance. And so that's kind of where we are. Man, we would love to see some news come through that helps us kind of bust through that. So again, it's been back in late March before we were at these above these levels. So we've kind of hit these levels several times, and we cannot seem to break through them. But maybe there'll be some news come out in the coming days that would help push things better. But you know what? We'll take it. Today, this week was today was a good day. This week was a good week, especially last 3 or 4 days. And we go into next week with a little bit of hope that maybe rates will continue to improve. Again, if you look back at the last 60 plus days, we really haven't seen rates move. They've just bounced up and down in about a 0.25% range. So we're not seeing big movements yet. Would love to see a big movement for the positive soon. Anyway, hey, listen, if you want to talk about your specific situation, whether it's qualifying, whether it's interest rates, I'm here to help. And I do include a link where you can go ahead and fill out an application this weekend if you haven't started working on your pre-approval. Anyway, take care. Again, I'm Joshua Phillips at Churchill Mortgage. Have a great weekend. Bye-bye.